Okay, so I mean that's part of my presentation, but it's just easier for me to respond and you know, ask questions. I'm not really gonna. I mean, I'm gonna respond to the question, but at the same time, I'm also gonna give you background information.
Perfect.
You know, just for everybody to understand. And you know, I see here that like, what's better, a C corp or an S corp, LLC or an S corp? Okay, so there are about four types of entities. One is single member LLC. There's a multi-member LLC. There's a C corp, and there's an S corp. Thank you. Thank you. So there's, again, four different types of entities: single member LLCs, multi-member LLCs, C corp, and S corp. A single member is usually best if you're earning less than $30,000 a year. If you're thinking of scaling really fast and high, a single member LLC is not the best entity because when you're a single member LLC, you report all of your income and expenses on a individual return, and you're paying the highest tax rate, plus you have a very high risk of being audited. And I don't know if you know, Frank, but I went to Vegas 3 years in a row, and I was trained by the national top tax experts, people that, you know, go to court, and, you know, like really top people. And that's how I know all of this information. They said that if you're making like more than $30,000 to $40,000 on a single member LLC return, you have a very high risk of being audited, and you're paying the highest amount of taxes. Now, when you're a C corp, you're being double taxed, which is not the best entity. C corps are best for like bankers, large, you know, multi-million-dollar, $5 million worth of companies. I don't normally recommend C corps to anyone unless like you would speak to an attorney and they specifically recommend a C corp. I normally recommend an S corp if you're going to be making more than $30,000 for the year, and that would be the best entity for anyone making more than $30,000 because you pay much less in taxes when you're an S corp. So I hope that answered your question. I hope I did. If you have any questions, please ask me. I mean, I talk about this all day, and I really want to add value to your team.
How much should you pay yourself as an S corp? If you're going to be an employee, how much should you actually pay yourself, and how do you determine that salary?
Excellent question. So the IRS, okay, so when you're an S corp, the IRS says that every single officer must pay themselves a reasonable compensation, and nobody really knows what reasonable really means. And what they say is, okay, so I mean, I personally, based on, you know, because I do this for 12 years and I network with a lot of accountants and everything, we have a generic insider percentage rule. So if you're making $100,000 net income, we recommend for your payroll to be 60% of your net, not 50-50, because that's when the IRS says, I mean, that's when your audit risks are going to be increased. If your net is $100,000, your payroll should be at least $60,000. And then since you own the company, you could also take money as an employee, I mean, as a distribution, and the distribution would be $40,000. So a lot of people say, you know, hold on one second, sorry. I'm sorry, hold on, somebody just, hold on one second. Okay, so a lot of people say, how do I know that I'm being reasonable? The IRS has a specific, you know, separate line. Line 7 says officers' compensation. And if they see that you're not paying yourself enough, you have a high risk of being audited, which is not something that you want. Another way of knowing is, you know, the IRS told us that you should go to salary.com or payscale.com. They're like other companies online that kind of tell you what you're worth. And thank you. Okay. And if you see, like, let's say you're looking for an insurance agent or you're looking for a salesperson, what would you pay someone else to do the job that you're doing? And if it's $50,000, $60,000, then that's what you should really be paying yourself. But sometimes, you know, people say, I could pay somebody $100,000, and owners don't want to pay that much. So if you're within the 60-40 rule, I did this for 12 years. I prepared over 1,000 tax returns every single year. So that's about 12,000 returns in total, approximately. I mean, this rule has been working with us, and thank God, none of my clients, my personal clients that we prepared, have never been audited with this specific situation.
Thank you.
You're welcome.
And whenever you want to go over the slides, Rachel, just let us know. You can share your screen at any time.
Okay. I don't really know how to use my. Hold on. Let me ask my assistant. I'm at a Mac, and I don't really. Hold on 1 second.
Okay. We caught Rachel off guard today, so give her a little bit of grace.
Yeah, I mean, I AdCon, for 3 days, and then I had like appointments. I think 20 appointments yesterday, back to back until 1:30 a.m. And I thought it was CST, and I'm like, oh my God, I thought it was a different time zone. So I'm sorry about that, but I'm almost. Okay. I mean, I know my stuff. I talk about this all day, every single day. I didn't even need to practice or anything, but this is what I do every single day. I help people. Hold on 1 second. Slides.
Question, Rachel. How often
Yes,
do you think
please.
you should switch a CPA?
Say that again?
How often should you switch CPAs?
How often should you switch CPAs? Great question. I never had anybody ask me that. It really depends. So you always want to make sure that your accountant is licensed, obviously, that's for sure. I mean, I don't know. I mean, it depends on how you feel. If you feel that maybe your accountant is not giving you the attention that you need to get, I would recommend switching. If they're too busy for you, I would also recommend switching. I don't know. I normally hold on. I normally tell people that you should have one accounting firm that does everything for you. And if your CPA does not offer bookkeeping, payroll, taxes, helping you with estimated tax payments, helping you with notices and questions, then you should switch your CPA or enrolled agent immediately, because it really hurts you when you have a separate bookkeeping company, a separate payroll service, and a separate tax service at the end of the year. And I could tell you exactly, if people have 3 separate services, then you're losing so much money. I mean, I could go into that. I had so many people just lose a ton of money, and there's always a miscommunication between the bookkeeping and the tax person and the payroll, whatever. But it really depends on how you feel. If the person is really giving you what you need, then continue with them. If they're not available for you within 24 to 48 hours from the time that you reach them, then you should really switch. That's not a good sign. As the most important thing is when you're having when you hire somebody, I really think that you should have one person do everything. I strongly have that. If not, then that accountant is not worth it, and they're doing a disservice by doing your taxes at the end of the year. And if you want, I could explain a little bit more, but just wanted to answer your question.
Okay, because someone actually told me once every 10 years, and I'm coming up on that 10-year mark to look at it. Do I have any complaints? No, but just wanted to make sure. 2, I also want to ask this question. If you are looking for a new CPA, what some of the questions are you looking for other than handling all those 3 items that you just mentioned? What else should you be looking for from those individuals?
What was your question? Sorry, your last question. Your last thing that you mentioned, because you broke up.
What are the questions that I should be asking, or interview questions that?
Oh, the accountant?
That is correct.
Okay. I would say, how many years have you been doing this? Because there are a lot of online entrepreneurs that are calling themselves accountants, and they're very new to this. So I would say, how many years are you doing this? Are you licensed? Are you, how many CPE classes have you been going to? Are you always updating? Because there are a lot of like accountants that do online training, which is the cheapest way of, I don't know. I just don't think they gain enough when you do CPE, continuing education online. I always tell people, I go to the best conferences all over the world. And if you see that accountants are going to the best conferences and networking with other CPAs and whatever, that to me just shows that you're going to do everything you can to get the best education. And ask them, how many returns have you prepared? How many have been audited? Do you help out if anything happens? Are you open all year round is another great question. Things like that. If they're not open all year round, I have a lot of people switching to me because they say in June, how do I share my screen? Oh, that way. Okay, fine. So let me just answer this question, then I'll share it. A lot of people say, in June they're applying for a mortgage and they're looking for a CPA letter because they need to know how much income they made for the year, or they're looking for tax returns and their CPA is not available. They're on the beach somewhere, or they're not available at all until the season begins. So if they're not available, then I don't know, they may not be the right fit for you. But that's important, being available for you all year round. Making sure that if you get a notice or anything, they're just available to help you. I personally hate when people charge me for every little thing. And if you have a notice and they're going to charge you for that, I don't know, that just, it's just like they're in it for the money, not there to give you value. Our clients, if they give us, if they have a notice in June or July, we review it for free. If we need to call the IRS, we help them out because they're a client. All accountants should really do that and help out. But if they charge you for an amendment or anything like that, then I understand that's totally normal. But some accountants, they're so old school that they charge for every minute that they work, and that's just the old way of doing things. I hope I answered your question.
Yes, thank you.
You're welcome. So, Frank, do you want me to just answer these questions? Because, these questions are really, in my presentation. And I see another question here. Like Steve asked, what is the proper way to deduct personal expenses? They're not really personal, but versus, I guess, you want me to answer that? I could answer that.
I guess the best thing to do, why don't you go through your presentation, and then if there's any content in there that answers the questions while you're going through that'd be the best way. And then if anything doesn't get answered near the end, we can attack those questions.
Okay. So do you see my screen?
Yes, ma'am.
Okay, perfect. So, I had this, I didn't really make changes to it, but I normally speak about very similar. And if I know that I'm speaking to insurance agents, right, Frank?
Correct. Yep.
Okay. So I'm going to apply the information to towards insurance agents. And, okay, so I'll start from here. So this presentation is for tax tips that will help you reduce your taxes and audit risks. That's really the most important thing that everyone wants. You could get a $10,000 refund and then have the IRS come back to you within 2 years and ask you for all of it back, which is not something that anybody wants. You want to make sure that if you're preparing your own return or you have an accountant helping you, you want to make sure that that person helps you reduce the risks of being audited and, reduce your taxes that you're going to pay. So since I'm licensed by the IRS and in 50 states, I'm required to give a disclaimer. This material is meant to assist you in thinking about legal issues that may come up in starting or running your business. It is not legal advice and does not substitute the individual for any specific advice of a lawyer or an accountant, because every single situation is really different. If you have a specific question, you can ask me. I normally don't like giving general advice. I love giving specific advice because if you give general advice, people apply it differently. But if anyone has specific advice on your specific situation, please reach out to me. I will give you a 100% consultation specifically to your situation, and I won't pitch you, I promise. I'm just here to help anyone in Frank's group. So we will help you, this presentation will help you find the best ways to help you reduce your taxes and reduce any IRS red flags on your tax returns. About me, I own this company. I'm licensed by the IRS. I prepared over 1,000 returns. Over 12,000 even. I'm a Tony Robbins fan. I travel all over the world to meet, speakers, blah, blah. And my passion is to help others with bookkeeping, payroll, and taxes. Tax tips. So as I mentioned, the number one thing that every single business owner making more than $30,000 is you really want to make sure that you have the proper entity selection. This alone helped business owners at least, thousands of dollars based on just this topic alone. Frank, I don't know if you know, but 2 years ago, I helped Dan Henry, and he allows me to say this. I helped him save him $150,000 just by this one tax tip. Believe me.
That's insane.
Yeah, $150,000. So he paid 5 different attorneys. I think $150, he said, per consultation. I guess in Florida it's really cheap for the consultation. And none of them were able to help him. Then he went to his prior accountant. And I remember him telling me he's an LLC. And I'm like, what are you talking about? How can you be a single member LLC? Something is wrong. I reviewed his tax return and I'm like, listen, I know for sure I can help you save $150,000. He's like, listen, Rachel, I went to 5 different attorneys and they all said that they can't do it. I don't know how you're going to do it, but whatever. I think 3 months later, I was able to win the IRS. What happened was in 2017, he came to me and you are not allowed to backdate an S election, which is such important information. When you open an entity, you have, I believe, 75 days for you to elect to be an S corp. And a lot of entities, when you open a corporation with LegalZoom, for example, they think they're completely done. And you need to sign and file a 2553 form with the IRS within 75 days of the time that you open the company. Now, I guess he didn't do that, whatever. We went back and forth with the IRS and we actually got him an S election in the end of 2017 for the beginning of 2016, which was a big win for me. But, just based on this tax rule, we were able to help him save $150,000 in taxes. Now, like I mentioned before, an S Corp versus C Corp, an S Corporation, it gives you all of the protections that a corporation offers, but this is wrong. The IRS no, okay, sorry, somebody copied this wrong. Okay, so tax tip number 2. I think somebody mentioned it there where, how do you pay for your phone bill and expenses? Always use your business bank account to pay for your expenses. Don't pay for personal expenses from that account. So for example, if you're using your phone bill, if you're using your internet, and you can substantiate that you're using your phone bill, and especially insurance agents, you guys are always on the phone, you're making sales, I would be okay with deducting maybe 90% or even 100%. I'm very aggressive, but I'm smart aggressive, not stupid aggressive. I would be okay with deducting 100 or 90% or 80%, whatever, of your cell phone bill because you're constantly on the go. Just like real estate agents, I do a ton of real estate agents returns, and they're always, people are looking for deals. You're getting text messages, you're getting emails. You're never, even on vacation, people are constantly working. And I would recommend using your business bank account to deduct business expenses. And the other important thing is if the IRS ever audits you and they see personal transactions in your business account, they may assume everything is personal. So always keep everything separated. Always have 2 cards in your wallet and say, you're going to go to Amazon or you're going to a store, whatever, Staples, and you say, is this a business transaction? Take out your business card. And if it's a personal transaction, take out your personal card. Don't commingle the 2. It's really not good. And then you really lose credibility in front of the IRS agent when they see, I saw the IRS once and she's like, what is this $4,000 vacation that the client took? And it was a personal expense. So it was just so much harder for me to prove that everything else is business. So just to, build credibility with the IRS agents, if you ever get audited, you always want to keep the 2 separate. Now, tax tip number 3, know your business expenses. So I have a list and I have a small business tax guide I could share with you, and then Frank, you could email it to everybody, or you could post it in your group, whatever works for you.
Sounds
But
good.
you really want to know, you really want to know what's deductible. So the IRS says whatever is deductible is the following. It has to be ordinary and necessary for your business. Now, you could tell me, hey, Rachel, I need to go to AdCon because I'm going to be, or like whatever conference in Vegas or traveling because you need to, network. And that's what you believe in order for you to make more sales. I personally, and no accountant can really say, no, you can't travel there because, I don't believe you. No, you are the business owner. You know exactly what you need in order for you to increase your sales. And it would be deductible because, there are specific items that are deductible, but, everything that's ordinary and necessary for your business is deductible. Now, there are people that tell me, oh, I need to take a limo to work. And obviously that's not ordinary and necessary. That's very excessive. You could take an Uber to work or drive to work. The travel expenses would be deductible, especially for insurance agents, because the IRS law says that moving or travel expenses are not deductible if you're going from your home place to someone's location. But most insurance agents and real estate agents, your home place is your workplace, and they allow work. They allow you to deduct your travel and mileage expenses from work to work. So if your home place is your work location, which what we normally do, and it's another trick that you could deduct expenses, then you could deduct your travel, your cars, the lease that you have, and etc. So these are the generic business expenses: rent and insurance, advertising, telephone expenses, professional internet, repairs and maintenance, any kind of supplies purchased for the business. And then depreciation, which is the most overlooked item. You really need to depreciate any asset that has a life of more than 1 year. If you purchase a computer for $1,000, most accountants say, oh, the life of, and most accountants, the ones that I speak to, are really robotic. So what they think is, oh, you purchased a computer for $1,000. You could only deduct, 5 years. The computer, according to the IRS, has a 5-year life, and you could only deduct $250 a year. And I see this a lot, and I really laugh. And you could, they deduct only $250 a year for the computer expense. But there's something called Section 179 law, and you could deduct the whole computer of $1,000 in the same year. So really allocating $250 every year for the next 5 years doesn't make any sense to me, especially if we could just deduct the whole thing and you could just use the whole thing as a write-off. Now, it really depends. Furniture has a 7-year life. You could do the same thing with, you could do Section 179. Don't do this yourself because the laws are very complicated. And just to know that Section 179 law, there is something that you could just write off the whole thing. Non-deductible expenses, if you get caught by, fines, penalties, or if you have any violations, they are not deductible. So a lot of people say, oh, I got a ticket and, it was double parked, whatever, and it's not deductible. So please don't pay your tickets from your business account. UPS actually won a law thing, recently, saying that they are actually allowed to deduct their parking tickets from their business account because it is ordinary and necessary for them to double park in order for them to do their job. So, I found that really interesting, and, they challenged the law. Tax tip number 4, keep track of your income and expenses monthly. A lot of business owners, insurance agents, real estate agents, they track their expenses and income, at the end of the year. There are a lot of people, a ton actually in January, I would say maybe 30 to 40 new business owners that came to us and said, hey, Rachel, my books are a mess. Can you please do the bookkeeping for me for the past 2 years, 3 years, whatever. I understand. There are a lot of business owners that are scaling really high and fast, but going forward, you should really keep track of your income and expenses. You should have an accountant that emails you a monthly report, a monthly profit and loss report every single month. And even if they email you, you want to sit down in the beginning of the month, like on a Sunday, and I call it CEO time. That's what I call it for myself. I block it on my calendar 2 hours on a Sunday, and I just review my monthly P&Ls, my weekly P&Ls, and I just say, okay, how much money did I make? What are my expenses for the week, for the month? What am I, just, reviewing your goals and everything. So a lot of people, they're in it, like they're just going. They're making money, they're working, but they forget to really review your income and expenses on a monthly basis, which is really crucial. It's something that every single business owner needs in their business. And then review, like I said, this is the most important slide. Review your numbers every single month, not every single year. Then tax tip number 5 would be know your payroll laws, dates, and fines. So you want to make sure in your state, how often do you need to pay? I mean, I think every state is the same, actually. The payroll deadlines are the same. But you really want to know what the payroll laws, like somebody asked me, how much do you need to pay? What's the reasonable compensation? How do you come up with the payroll? What are the dates? Every single quarter you need to pay your payroll taxes. January, February, March, payroll returns are due April 30th. April, May, June, payroll returns are due July 30th. July, August, September, October 30th is the deadline, and then October, November, December, January 30th is the deadline. And if you owe more than $2,500 worth of payroll taxes, you are considered to be a monthly filer. So every single month you need to, pay the taxes, and your accountant should really help you. If you want to do your taxes yourself, that's okay. But payroll is something that you should never do your taxes on your own because it could get really complicated. And there's something called a trust fund where the IRS says, it's money that you're taking away from other people and it must be deposited correctly. And if you mess up, then, it's sales tax and payroll taxes are things that people go to jail for. If you don't pay your income taxes, there's payment plans and there's other things, but payroll and sales tax are things that are considered to be trust fund taxes. Okay, employee or contractor. That's another thing that a lot of insurance agents are asking me. And so when you have an employee, you want to make sure that, in order for you to save the most money, you want your staff to be on a 1099 because you don't pay the payroll taxes every quarter. Now, the IRS, if they see a lot of independent contractors, they may do a Department of Labor audit, and they want to confirm that every single person is indeed an independent contractor. The best way to do that is never pay someone to their individual name. Now, if you ever get audited by Department of Labor, and I've won many cases in the past, they look at the bank statements and they say, okay, let me look at all the checks. That's the first thing they do. And they say, okay, let's say for example, Frank. If I paid Frank, they're going to say, okay, show me who is this person? Why did you pay him? What was the reason of you paying him? And I'll say, oh, I paid him, to do a small job or whatever. They're going to consider him as an employee unless, it really depends. They're going to automatically consider him as an employee, but then you would need to fight and prove that he's really an independent contractor. If I paid his corporation, for example, they won't even question it. So if they see, Staples, if they see Best Buy, or if they see like major corporations in the that I'm paying, they're not going to stop and say, oh, let me see, Empire Tax. Is this an employee or is this an independent contractor? They're not going to say that. So that's the number one thing. If you pay someone to their corporation name, for sure that they're an independent contractor because they should also be selling their services to other people, and you are not their only, their only contractor. You're not their only boss, and that's another thing that the IRS looks at. You should not have any behavior control. They should not be working for you completely full time. They should have other vendors that they're working with, and that's how the IRS would know that they're independent contractors and not employees. So this is actually New York State, since I'm in New York State, but I'm licensed in 50. Every single state is different, but you would want to make sure to know if you have to have workers' compensation insurance for employees. Now, there are people in New York that did not have workers' comp insurance and they got fined. I have a client who got fined $111,000 because her accountant told her, oh, I'm not an insurance agent. Why would I tell you that you need workers' comp insurance before you hire people, which to me, I think is just the funniest thing, because if you're coming to any accountant, they should really assist you with tax advice and business advice in general. So even if I'm not an insurance agent, I tell people that you need workers' comp insurance in New York State before you hire any employees, and you want to make sure what the laws are in your state. Payroll taxes, if you hire employees, you need to have a W-4 form, an I-9 form. Make sure to have these two documents before you hire any employee on a W-2. And if you hire independent contractors, you want to make sure that you have a W-9 for every single person, that you're paying to their individual name. This is really important because we just passed 1099 season, and a lot of people did not know this. And I tell people, hey, listen, you paid 5 different people, more than $600, and do you have their social? Do you have their information? And a lot of people said no, they don't have it. So they need to follow up. They need to get it, and now they're late on their 1099s. It's crazy when you're doing this, 2 weeks before the deadline. You want to make sure that you have a separate file on your desktop or Dropbox, whatever it is, and call it W-9s. And before you pay anyone, get the W-9s beforehand. And then, other important payroll information. Payroll returns are due every 3 months. I had a client who thought payroll returns are due every year, and she ended up paying $15,000 extra in payroll taxes because she did it herself. New York State charges $1,000 every quarter, a fine for every quarter. I don't know what the laws are for every single state because they're different. Don't ever hire a payroll company. They overcharge. I don't want to mention any specific, payroll companies, but I had clients where they used major payroll companies, and they really listen to you as what you tell them. So that guy that asked, how much your payroll should be, you tell a payroll company, hey, I want to pay myself $100,000. They'll just calculate the taxes and tell you what your net pay is. They don't really assist you with how much you should be paying yourself, and they don't help you in any way. So don't hire a payroll company. Never pay an employee or contractor until they filled out these forms. Frank, do you want me to continue, or how am I doing on time?
You're doing great. This is all really good stuff that we all need to hear. Guys, do you have anything that she went over? Any questions on anything that she just went over? Yeah, I think we can knock it out in another 15 minutes, Rachel, or what do you think?
Yeah, I think within 10 minutes I should be done.
Sweet. Awesome.
Okay, perfect. Okay, so next slide is tax tip number 6. Know your deadlines. Make sure your accountant reminds you about these deadlines. A lot of them, they just, they rely on the client to follow up with them. We don't believe in that. We believe that a lot of business owners are very busy with their life. And, I hope, I don't want you guys to think that I'm pitching you in any way. I just like to just tell you the difference, and I'm not here to pitch. I just hope, I hate that. I hate being salesy, but I just want to tell you, the way we work is we remind our clients, hey, listen, your payroll returns are due, or your 1099s are due. And I have a system in my office where if we don't reach my client within 2 days during, via email, we text them. We say, hey, what's going on? We need your 1099s. We need your bank statements. Or we even go on Facebook. All my staff have, access to my Facebook Messenger, and we say, hey, we need this, we need that, whatever. So make sure your accountant really reaches out to you when the deadlines are due, because you never want to miss a deadline. If you do, for some reason, you may be non-compliant. And then if you're non-compliant several times, you get penalties, you get interest, and accountants in general should really help you save money save money, reduce risks of being audited, give you advice, make sure they're giving you payroll returns, but make sure they're giving you monthly, financial statements, and just make you compliant. Make sure that you're meeting every single deadline. And that's what you really need help with. Know your deadlines, but make sure your accountants are on top of it. And when you meet another accountant, you should ask, hey, do I need to follow up with you when these deadlines are coming close, or are you going to follow up with me, and make sure that they do? And that's really important, because you don't want to pay anything extra. I don't agree with that. Tax tip number 7 is Make sure that you safeguard yourself from an identity theft. I think I saw in one of the questions that there's someone that is a sole proprietor. I think he said it for 20 years. I don't think you should be a sole proprietor. It's not the best entity because you are not protected in any way. At least if you're making less than $30,000, at least be a single member LLC and have a EIN number. So you're probably going to be paying. You're probably going to have other insurance agents or major companies that you're going to be working with. On the W-9 form, you want to avoid giving your social security number because that's really, you never know. Files get lost and then, now you have to deal with a identity theft situation, which is nobody wants. It's a waste of time. If you want, you could even get an EIN number under your individual name. And it's so easy. You go to irs.gov and get a free EIN. Just make sure you're doing it right. Or your accountant could do this for free for you. They should not be charging you. Get an EIN and don't use your social, please. At least, this is the one thing that you learn, this is really important. And another thing, pay your estimated tax payments quarterly, which is so, so, so important. There are people that come to us at the end of the year and I tell them, hey, listen, you owe, $10,000 at the end of the year. And they're like, oh my God, how am I going to pay this money? I don't have the money to pay it. And I tell them, hey, if I told you that you were supposed to pay $2,500 per quarter, would that be easier for you? And almost every single person tells me yes. So at least pay your estimated tax payments quarterly. And this may sound funny because the way we do it is really different. Pay your estimated tax payments quarterly on the actual profit and loss. So for example, almost 99% of the accountants that I speak to, I say, how do you calculate your estimated tax payments? And trust me, do an interview with almost every single accountant. They're all going to tell you, oh, we look at last year's and we just divide 100% of last year's tax. We divide it into 4. So a lot of entrepreneurs in the online world, and I'm sure with insurance agents, you're all motivated and you normally outbeat the amount of income that you make last year. So let's say somebody came to me and he earned $50,000 last year, and this year he made $150,000. So you're still going to have a huge tax bill that you did not expect because you only paid 100% of last year. When we do the monthly profit and loss reports, we actually look at the actual net income and we pay your estimated taxes based on your actual 2018 amount. So you will never have a huge bill at the end of the year. If you do owe, it'll be less than $1,000 and it will be so insignificant that you're able to make a payment on time. Never pay estimated payments based on last year's. It just doesn't make any sense. And it's the IRS rule, but you would rather pay the taxes that you need to pay now because you don't want to give a free interest loan to the IRS and then get a huge refund, or you don't want to owe a lot of money at the end of the year. So reduce risks on your tax return. Incorporate your business. It does reduce the risks. I asked so many people in my network, and I actually see it. I barely see corporations get audited. I have a client who makes about $5 million a year, and he has all of these other expenses, and he deducts, I believe, approximately $5 million as well on their expenses. For the past 20 years, he's a new client of mine for 2 years. But for the past 20 years, he never got audited. And I believe it's because he's an S Corp and it really reduces the risks of you being audited. But then we have clients that want us to represent them in an audit, and they're mainly single member LLCs. They're mainly filing all their income and expenses on their Schedule C. And it's ridiculous to see what the IRS agents want to see. They want to see every single travel receipt. They want to see every single meal. And remember, I don't think I have this here, but when you eat with someone and you want to deduct meals and entertainment, remember that you need to write down who you ate with, what you spoke about. It's just crazy. And the agents that audit individual returns are not that sophisticated. They don't understand why you need to spend, $5,000 for a conference. They don't get that. They're employees themselves, and it's very hard for us to explain that to them. Whereas if you have a TCO, which is a tax compliance officer in the IRS, and they see, lots of businesses and they're familiar with business returns, and you want to deduct a $5,000 conference, it's normal in their world. So always have a reasonable salary. Remember my 60-40 rule. I normally don't tell this to everybody, but Frank is the best and I'm doing it for him. In order, make sure that you're paying yourself at least 60% or 55% of your net the line 7 on your corporate return must always be a little bit higher than line 17, which is your distribution. If your W-2 or if your line 7 is less than line 17, which is like the net income, you have a risk of being audited. Remember, the first year it's okay. If you have it the other way around, the IRS doesn't audit. I mean, they don't really, in my experience, audit first year S corps, but the second year and third year, you gotta start paying yourself. Don't deduct high meals and entertainment expenses. And a lot of insurance agents, I think you guys, take out people because you want to make that deal, or you have a lot of travel expenses, which is very high. Try to keep track of, where you're traveling to. They do want to see those receipts, why you're traveling, where you're going. It's crazy, but yeah, they really want to see backup for every single travel expense. So, and then 6, don't deduct high travel expenses. Like I mentioned, file your corporate returns on time and never late. Even if you don't have the money, you always want to file on time and never late. File your payroll returns on time, which is also important. Always pay your taxes on time and do not have a large balance due, which goes back to my estimated tax thing. Pay your taxes quarterly based on your actual monthly profit and loss report, which is what you want to, do. Make estimated payments in a timely manner, and income and expenses must be proportionate, which is another really important thing. So if a client comes to me and they say, oh, I made $5,000 last year, but you have $20,000 worth of expenses, that increases the risk of you being audited as well. And it has to be proportionate. If you only made $3,000 for the year, then deducting 100% of your phone bill won't make sense, because did you really speak to a ton of, salespeople? Did you, you would need to show proof, but then I normally reduce the percentages based on the phone bill and the internet if you made less income, because it has to be proportionate. Set your goals for success, save time, money on any fees, reduce anxiety by knowing your numbers, and that's it. I'm done.
Man, that was amazing. Really quick question from Candace. She says, I would like some clarification on the 1099. I have 2 part-time employees that I pay as 1099. Is that not okay?
She has 2 part-time employees on a 1099. 1 second. So I would need, hold on, I'm sorry. How do I get I would need more information as to if they should be on a 1099, are they working in her home, or, I would need more information. I guess she's paying them to their individual name, I'm assuming. And she needs to just make sure that she's not their only source. And she may have a risk. I really don't know what they're doing, what her control with them is. Does she specifically tell them, hey, you need to work 9 to 5, you need to work specific hours? If she does, then they should be on a W-2. They should not be on a 1099. And maybe she could convince them to open their own entity, maybe a small single LLC. I had someone in the past who, made their independent contractors open LLCs. It's really cheap. It could be like $200-$300, but then you avoid all of the Department of Labor, problems. So she may have a risk if, God forbid, she gets audited by Department of Labor and they see that she's paying an individual person. She would need to have some independent contractor agreement or something proving what they're doing, how they're independent contractors and not employees. And yeah, if she wants, you could call me and I could tell you if they should be, W-2s or 1099s, but maybe you could have them sign an agreement or convince them to open their own LLC.
Yep. 2 more questions, and then I think we could cap it off. I see a really good one from Joseph Sanfrantelli. Says, I'm assuming if we incorporate this year, it's not going to count for our taxes in 2017.
That's correct, yes.
Okay.
That's correct. So even if you incorporate now, let's say, whatever today's February something, all your income from January up until today would go on your individual name. And then if you incorporate today and you get your EIN number today, then all the income has to go. So you incorporate, you have to open a separate bank account immediately, go to your, bank with the articles of incorporation, with the EIN number, tell them that you want to be an S Corp, make sure you fill out the S Corp forms, and then make sure that you tell all of your insurance companies or whoever's paying you that you now switched from a sole proprietor to a corporation, and they need to pay the corporation name, which is so important. They can't continue to pay your individual name and you deposit the money into the business account. It needs to be made out to your corporation name. Fill out a W-9 form for them, email it to them so you have track that you told them, because at the end of the year, normally when people switch in the middle of the year, they get a 1099 on their individual name, which messes up the whole thing. So make sure when you get the check, it has to be made out to your corporation name.
Awesome. Rachel,
Yeah.
if some of the guys from the tribe here, some of the agents want to schedule some consultation time with your team, what's the best way that they can do that?
They could email me, or I think we're all at the Facebook group, so I could just post my schedule, or they could also call the office 212-300-5776. They could also PM me if they would like. I'm on Facebook, and I have my VAs message each individual person if they have a specific question. We send them my calendar link, or they could email me as well, Rachel@EmpireTaxUSA.com, whichever method works for them.
Awesome. I'll post that information in the group. Yeah, guys. So, I'm really thankful for Rachel showing up. One of the awesome things that once I started working with her, she mentioned this before, and I think Mansa asked this question, and we can end it here. But he said, how do you know when to switch CPAs? And the biggest thing for me was my CPA wanted my documentation mailed to his office. He literally wanted to come by my house in a van and pick it up, and, with security and whatnot. And when I had a consultation with Rachel, she said, hey, look, we have a cloud system. All the documentation we need, all you got to do is scan it and upload it, and boom, it's done. And next thing you know, they're already filing taxes for me for the past 3 years and this year. And literally all it takes is a click of a button and it's uploaded. And for me, being the type of client that needs my CPA to work online, that's how I knew that she was her firm was the right fit for me. So I know a lot of us might file taxes with different accounting firms every single year, but if you need something consistent and something that's going to save you guys money, that's going to do P&Ls for you, highly recommend Rachel and her team. I'll post the data in the group. And Rachel, thank you so much for making the time. We really, really appreciate you, and we look forward. I know some of these guys will want to get together with your team and work with you guys. So any final questions before we're out, guys? They're just loving the information, Rachel, and just want to thank you again.
No problem. You're very welcome. And, I'm really here to help. I'm not here to pitch. And if you need to do your bookkeeping yourself, I will tell you. I even have templates. If you're not making, more than $50,000 or whatever, I don't, sell clients if I can't help them. So right. I have free resources, and, I'm in it for the long term. If you guys have any questions, I will answer it. I'll get on the phone. No pitches. I hate that. Like I said, I'm here to help your group. I'm here to help you. And thank you for the testimonial, Frank. We enjoy working with you as well.
All right. Well, thank you, guys. Thank you, Rachel. Everyone have a good rest of your week. Take care, everyone. Thank you.